It's Monday, the 20th of April 2026. Welcome to the Fast 5 Business News by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 stories, 5 minutes. Let's go. Story number 1. The local share market is getting narrower, creating investment risks, particularly for index investors, with 8 of the top 10 companies on the bourse now coming from just 2 sectors, mining and financials. Those 2 sectors account for more than 50% of the ASX 200, while, get this, the top 5 stocks, the big 4 banks and BHP, account for 37% of the market. Now, Commonwealth Bank remains the ASX's largest company with market cap just shy of 300 billion. But BHP then comes in at 285 billion. It's a pretty significant drop then to the next 3, Westpac, NAB and ANZ.
They have all done really well. The other one that's done really well recently, Macquarie Group, up 20% this month as investors have looked at taking on more risky assets. Wesfarmers, dominated, of course, by Bunnings, Kmart and Officeworks, is number 6. Number 7, CSL. It is not just the worst performing top 10 stock, the 6th worst performing stock on the ASX 200. Since its peak of August 2025, it has halved its share price, which is pretty incredible for a large cap. Rounding out the top 10 stocks, Fortescue Metals and Rio Tinto, both up 40-50% over the past year.
Does it matter if the market is so concentrated on just mining and financial stocks? There are risks here, obviously. What are they?
Well, I mean, it doesn't matter if they do well, but it matters a lot if they don't do well. The most fundamental rule of investing is diversification, and the top 10 stocks on the ASX are just not diversified. When you've got 50% of your market in financials and materials, then you have to think a bit broader than your market. It happens at Wall Street. The Magnificent 7 tech stocks dominate there. Even the LSE, London Stock Exchange, lots of financials, lots of consumer staples stocks there. Not unusual, but not best practice for investing. Spreading your risk doesn't mean having half your equity portfolios in miners and financials.
No, always a good idea to get professional advice from a financial advisor before making decisions. Sean, story number 2, the market is rising and falling on the latest news out of the Middle East and on oil prices then. We headed into the weekend looking like container ships would be transiting the Strait of Hormuz again. Iran declared it completely open. It didn't seem to last very long because then Iran said the strait would close once again until the Trump administration lifted its blockade of Iranian ports.
Yes, and to demonstrate they were serious, 2 Iranian gunboats opened fire on a tanker in the Strait of Hormuz, while other ships report being hit by unknown projectiles. Very difficult to get a handle on exactly what's going on. Both sides say progress is being made in peace talks. The 2, though, are still some way from a deal. Hopes are high that they will meet again tonight and at least progress further these peace talks.
Yeah, indeed. Story number 3, interest rates might be rising, Sean, but competition in the mortgage market is also heating up, with major lenders offering cashbacks and fee waivers to attract and keep customers. ANZ, for example, is offering cash payments to some customers of around $2,000. ANZ is the number 4 of the 4 big banks when it comes to mortgages. In fact, there are probably 5 big banks when it comes to mortgages, given how much market share Macquarie Bank has picked up lately. And it's also offering fee waivers and discounts on competitors' rates of up to 20 basis points, according to media reports.
So ANZ said the amounts were discretionary depending on borrowers' circumstances. Rival banks were making similar offers. Cashback deals were really big a few years back. Basically, ANZ's the only one that really does it now. But certainly, as rates have risen this year, customers have switched between lenders, according to Equifax. The moral to this story, Michael, if you're taking out a mortgage, even if you've got one right now, shop around for the best deal.
Indeed. Story number 4. I love this. Dozens of Chinese-made humanoid robots took part in the Beijing half marathon over the weekend, demonstrating fast improving athleticism and autonomous navigation skills. And in fact, they actually beat the human runners in this half marathon by about 10 minutes. And this year they actually had to navigate the run and the terrain autonomously rather than being directed by a remote control. It's a big improvement.
Big improvement from last year where most of them fell over at the starting line. One did fall over this time, but pretty much most of them made it. The robots and the 12,000 men and women ran on parallel tracks to avoid collisions across a 21-kilometre race. The winning robot, developed by Chinese smartphone brand Honor, which is part of Huawei, finished the race in 50 minutes and 26 seconds, which is a couple of minutes faster than the world record for humans. Why do we care? Well, the experts say the experience helps scientists understand structural reliability and cooling. There you go.
Finally, story number 5, and one of the more incredible stories out of Wall Street over the past week has come from sustainable shoe brand Allbirds. Now, on Tuesday, its share price was less than $3. On Wednesday, it said it was no longer a sustainable shoe brand, and it decided instead to become an AI infrastructure company. And its share price jumped nearly 900% to $22.
Yeah. It's come back somewhat. It's about $11. Still nearly 4 times what it was when it was just a boring old shoemaker. Allbirds is storied. It was known as Silicon Valley's favourite shoe, went public in 2021, $4 billion valuation, fell as far as $95 million. A lot of people did their money. Now it is, as they say, pivoting. It will sell its footwear assets, use the shell of the former business to raise $50 million and become effectively an AI startup. It's going from Allbirds to Newbird AI, though, as many commentators point out, there isn't much detail about how it's actually going to capture the AI infrastructure market. Anyway, 900% in one session, not bad.
Yeah. There we go. The top 5 business stories in 5 minutes. Thank you, Sean.
Thanks, Michael.
It's Monday, the 20th of April, 2026. Remember to hit follow on the podcast. And if 5 minutes isn't enough, you can find our longer daily show called Fear and Greed, wherever you listen to podcasts. I'm Michael Thompson, and that was the Fast 5 Business News by Fear and Greed. Have a great day.